Today, my partner and I, Ketan, will present a few survey results, a survey that we conducted to SMBs across Canada over the summers with respect to their banking preferences. And we're both part of Deloitte commercial banking practices, where we help financial institutions articulate their strategy, but also transform their operations and product. And we do regular market research on either the needs and the challenges of Canadian SMBs, but also how well financial institutions are serving and solving those needs. If we go into the next slide, actually, we'll cover four main topics today. Who are those SMBs? What are their main challenges? That's number one. Then we'll talk about how effective IFI is in supporting small and medium businesses. Then we'll cover some of the levers that motivate small, medium businesses in Canada to actually switch financial institutions, and start talking about high potential segments that maybe may represent an opportunity for SMBs. On the first point, I'll be very quick on it because this is likely common knowledge to all of you here. But the SMBs are really the driving force of Canada's innovation, growth, and employment for sure. In a few numbers, it's 1 million businesses. It's 99% of Canadian businesses, more than 60% of the workforce, 50% of the GDP. And what's not on the slide, though, is if you think in terms of financing volume, in 2024 alone, it is 93 billion of debt that was contracted, and 360 billion of debt that is outstanding, just for small and medium businesses. So certainly a market that all financial institutions, and I know we have alternative lenders, we have traditional FIs, we have credit unions in the room, that you can tap into and help those small and medium businesses actually grow and graduate from small to medium and medium to small. Now, if you move on, we know that the current economic conditions are tough for small and medium businesses, and you've attended a few panels today, and you've heard that topic over and over. So we wanted to ask them, what are the facts, the factors that hinder your growth the most? And more than 70% of them told us high operational cost, inflation or rising cost of input, inadequate funding to scales, as well as managing the debt level. We compared actually those results with another survey that we keep an eye on from StatScan, which is the Canadian Survey on Business Condition. And the results are fairly similar. It is much more a cost problem than an issue on the demand side of things. Businesses are still saying that their key challenges are growing operating costs, deteriorating profitability, much more than a problem in the demand for their product. For sure, all those numbers are averages across industries and across provinces. And so those are factors that are important to take into account, and we'll get back actually on some of those points. As we move on, we wanted to understand also what is the financing being used by the SMBs. So 75% of SMBs are still telling us that they use their fund to cover day-to-day operations, covering payroll, bill, utilities, rent, supplier payments. First and foremost, small and medium businesses are using debt that they contract to manage working capital. And when it comes to use that financing more toward growth and longer-term growth-oriented goals, think in terms of business expansion, digital modernization, or productivity and efficiency, these usually come at the tail end of the list. It's only 1 in 5 that do use that financing for those more longer-term oriented goals. And in reality, those goals are the ones that may actually help them address some of the key challenges that I was mentioning just before. So maybe I'll turn over to Ketan right now to talk about how well our financial institution helping SMBs on those matters.
Yeah, thank you, Jean. So I'm bringing back this page that Jean covered around the largest challenges that SMBs face. And what we wanted to understand that giving these challenges, how well do these respondents feel that their FIs are doing in actually addressing these challenges? And the answer is not very well. For these specific challenges, you can see that 2 in 5, even half of the respondents would suggest that their FIs are not providing adequate support to address these challenges. What this really tells us is that with this audience, with the diverse audience here, there's definitely value being left on the table. And in order to capture that value, really focus in on some of these needs that are very much cost-driven today, but there are other factors as well that might be a bit more growth-oriented. So if we move to the next page. So we wanted to understand a little bit more. So not only how effective were FIs, but then what do SMBs actually value? And it really, across all of the different responses, 6 main themes emerged. And so without going in deep diving into all of these in the limited time that we have, let me just pick a few. So personalized advice and support. This is really about 2 main things. One, really understand your client's business. Understand how they operate, what their challenges are, what are the opportunities for them, and provide support through a mix of digital means as well as personalized insights with an experienced advisor. In fact, that last point was something that we'll look at later, which is that many SMBs do not feel that their advisors have the appropriate experience and understanding of their business in order to provide contextual support. The next one I'll go to is number 5, in similar lines, proactive communication and insights. So many different mechanisms to do this, but really being there to understand and to help guide that business through managing challenges, taking advantage of opportunities, industry insights, market trends, the implications of regulatory changes, understanding how to manage different business constraints, cash flow, and so on. I think one of the things I'd like to point out across all of these is that it's not really a mutually exclusive set of themes. You can imagine a world where through the right mix of digital capabilities, analytics, AI obviously, providing proactive insights can be beneficial to all SMBs. However, doing so with a human touch. We've got other data that we'll share later that also says the value of that client-advisor experience cannot be neglected. Finally, I'll point to number 2, reliable customer service. This is really about consistency across the client lifecycle, whether it's the initial onboarding, but all the way through servicing. And again, different businesses have different needs, so meeting them where they are, whether that's through digital channels, whether that's through branch networks, whether that's through one-to-one advisory relationships, becomes critical. And so given this value, we also wanted to look at this slightly differently, which is what would drive SMBs to potentially switch who they bank with, who they lend from. And unsurprisingly, pricing and flexible terms around financing emerge as the top ones. However, if I look at the bottom right, the font's got a bit messed up there, but that's okay. But you see like 23% of an enhanced suite of financing and non-financing products. We extend this concept a little bit more. Not only financing and non-financing products, but also establishing better services, whether it is cash management, cash forecasting, but going beyond traditional banking services such as legal advice, tax assistance, helping through understanding supply chain implications, especially today, very important. It also means extending beyond just the relationship as a business owner, understanding that business owners are also private banking clients, wealth management, investments, and understanding the full relationship that you can have with businesses is critical. And when you can meet many of those needs, especially for more full solution providers, the stickiness that comes with is paramount and definitely an opportunity. Finally, operational excellence. And again, this ranges from that initial onboarding, origination of loans, faster time to money, faster time to funding, but even on the customer service side and making sure that requests are consistent. There's a standard process. Businesses know who to call. They know that they're going to get a response, which, as Jean mentioned earlier, given the high degree of financing being for working capital, when a business needs it, they need it pretty much right away. So I want to dig into a little bit of this now, so I'll pass it over to Jean to provide some additional data points.
Thanks, Ketan. And so we heard that from the SMBs that FIs actually have a few levers to pull in order to switch, to get them to switch. But not all all the levers that Ketan just mentioned, pricing, operational excellence, flexible terms, or the suite of products, they're all not necessarily created equals, actually. And I think that there are some that FIs have probably more agency to work on, depending on the risk profile or the profitability of these levers. So remember that we were saying, and we heard directly in that survey, that 30% of small and medium businesses that we surveyed still told us that they are willing to switch for reasons related to operational excellence of their FI or their soon-to-be financial institutions. And they clarified it to us that their key pain points throughout the financing journeys are that 1 in 4, it's about providing information multiple times again and again. 1 in 3, it's about the excessive documentation requirements. And again, 1 in 3, which was the last one and the most frequently cited response, was that long wait time was actually like one of the key painful topics that they had to go through, when applying for financing. And some of that data is actually, again, not the same based on the industries. Industries like agriculture, food and accommodation services, it's not 1 in 3, it's half of them saying that like the time to like getting funding is actually like a key issue. Let's switch to the next point here is that additionally to the points and the facts that I was sharing before, SMBs are actually telling us that faster access to financing does command a premium. 1 in 3 of the SMBs that we surveyed told us that they would consider less favorable financing terms in exchange of accelerated time to fund. What it says is that 1 in 3 are saying that they would be willing to pay more in order to get their money faster. And I guess it makes sense if you look at the next 2 stats that says that there's still more than 30% of them that are saying that they are waiting more than a month to obtain their funding, more than 1 month to obtain the funds that they want. And a quarter of them abandon their request because of the lengthy approval process. I think that's kind of like a call to action to change that and to help SMBs solve these financing pain points that they are facing. Now, you may be asking yourself, if I do all of that really well, what's actually the size of the price? And so if we move on to the next slide, we also asked them, how many of you are willing to switch financial institution over the next 12 months? And 2 in 5 small, medium businesses are saying that they would consider switching FIs over the next 12 months. So we did a bit of digging on like past survey data that may exist, and we found that in 2022, there was a CFIB, the Canadian Federation for Independent Businesses survey that was done, like on the banking preferences for small, medium businesses. And back then, so in 2022, it was 1 in 5. So clearly, probably like an upward trend that we're seeing in terms of the willingness or propensity to switch financial institution in the business banking space. If we move on, the other thing is now they've switched, but you may wonder that whether they multi-home or not. And in Canada, like small, medium businesses are telling us that, well, it's probably no surprise, but that they do not multi-home. 70% of them have one single primary banking relationship. And we're not in a market like in the UK where some of my British colleagues would have done like a study demonstrating that the single banking relationship is eroding, in fact. And the same stat is actually true when it comes to the number of financial institutions that you're applying or that small, medium businesses are applying to. Are they shopping around? That's the question that we wanted to get an answer on. And the answer is actually no, like 62% of them are applying to only one single financial institutions. So that brings the case to what Ketan was saying, which is it gives the financial institution a way to get deeper into that banking relationship, not solely having a lending or business banking relationship, but also going into personal and investment, where you can have that 360 view of the customer relationships with that one bank mentality and referrals across business units to capture the most throughout the customer lifetime value. Okay, then why don't I pass it over to you for some closing remarks as well?
Thank you. So all's to say that Canada is not a homogeneous market, and there are different trends that emerge, and some of these things will shift over time as different business conditions and macroeconomic factors happen. But I think if you look at this, maybe somewhat surprisingly, maybe not surprisingly, but Ontario and Quebec seemed to, let's say, underperform or actually stood out when we looked at it from the percentage of SMBs that lack financing. And they would state that it's a major impact to their operations and running their business. Other provinces were lower, and you can see that there are just different trends that might be also reflective of another view that aligns this to industry. So when we looked at that demand for financing, the ability to take on debt, the plans to take on financing, and the actual ability to obtain that financing, we saw a few points. And some of these data points may be less surprising, some of them may be more surprising, and some of them, what I would challenge is that in the markets in which you play, just understanding that these factors can take place, whether you have a national footprint, a local footprint, or maybe more targeted other ways of segmenting. So for those businesses that could take on more financing, agriculture stood out at the top. Interestingly, in the planning to apply for financing, agriculture also stood out at the top. Challenges obtaining enough financing, and perhaps today in today's housing market, both for residential as well as commercial real estate, you see that the challenges often appear in construction. And again, all of these different industries appear sort of around some of the bookends that we have, but you can also imagine that those with heavy asset-based concentration and asset-based need for financing, investments, physical assets would stand out a little bit more across these data points. And just to be clear, the first two columns represent data that was directly provided through the most recent Canadian survey on business conditions published by StatsCan. The last column reflects and sort of shows correlation to our study of SMBs. I think the takeaway here across the previous slides, as I mentioned, right, is that as you think about your segmentation, as you think about where you want to play, as you think about the specific nuances and how you show up in market, you take these into consideration. The industries that you serve or want to serve and the specific needs might influence not only where you go, but also the products, services, pricing, et cetera, that you'll need to do to win in those markets. Okay, so I would say that a majority of today's conversation and our survey really had a financing focus. But as we also alluded to, it doesn't just stop there. When we asked SMBs what their overall set of expectations were, and not just the financing expectations, 2 in 3 told us that they didn't receive insights that were tailored to their specific business situation. And we talked about this earlier, but as you think about what does that mean in the future, they are really looking for a co-pilot to help them manage their business, understand their business, fund their business certainly, but really providing the right insights as we talked about earlier. 1 in 4 have business management tools that fail to integrate with other tools. Knowing the various people that are at this conference, fintechs that are providing their own bespoke solutions, fintechs that are serving other financial institutions and distributing their products or solving problems that other financial institutions and lenders can provide, as well as traditional financial institutions and traditional lenders, thinking about what does an integrated solution mean, how does that show up as far as a small business or small medium business is concerned, really, and making it accessible to them how they want, where they want, whether that's through an online banking portal, whether that's in their own ecosystem, or whether that's through some sort of an integrated solution that simplifies how they manage their business. And finally, 1 in 4 have advisors who do not have deep expertise and knowledge, and that they're too time-consuming. This has everything to do with wait times, not knowing who to call, or calling who you think is the first primary point of contact, but being shepherded around from a branch to an advisor to a back office, so on and so forth. But really, that quick access to expert advisors is key. I would just state that, especially in today's environment where working capital is of critical need, where banking solutions are very important, providing that expert solution advice through channels, through digital channels, as well as through human touches, I think is really a differentiating proposition for all of you in the room. As Jean opened up, we all know that Canadian businesses are struggling. Just to add in a couple of other data points, the Bank of Canada recently published a report that said that insolvencies are 3 times higher last year than they were in 2021, so essentially pre-pandemic. Similarly, BDC recently launched and provided a statistic that new business formations are essentially at its lowest point in about 20 years. So as all invested parties into the success of our SMBs in the country, in many ways they pay our checks, in many ways they are our friends, our families. I think it is paramount for all of us to figure out, how we do more. I think that many of the panels today, starting with the keynote fireside chat with Tal and Chadwick this morning, set a great tone for that. Some of the other panels that I attended, I think, reiterated that, and hopefully some of the data that we provided to you today help reinforce some of the reasons why financing is important and more integrated financial services are important, but also what we can do and really step in with differentiated solutions. Before we close and maybe open up for a little bit of Q&A, we are going to be publishing a full report with this, so I'd encourage you to take a snap of that QR code and we'll make sure that you get early access. And then just to state that between Jean, myself, and our broader business banking and commercial banking team, we do regular surveys, but also and use that to really inform and help our clients on where best to play and how best to win through new solutions, new products in the market. So thank you, everybody, and maybe I'll just open up for some questions. I think we've got 6 or 7 minutes here. Hi, yeah.
Hi, I have 3 questions, please. First, how many entrepreneurs participated in the survey?
Yeah, 500 out of them.
Were
Not
they
necessarily small businesses.
small businesses?
Small
Those
and medium
probably
businesses,
the business
yes.
owners were answering the questions, right?
It could have been, or it could also have been anyone who has one of the filtering question was around having direct access to the finances. So it could also be anyone that's working with the business owner, with respect to managing the banking relationship or the finances of the business.
Cool. And the sectors that they were coming from were mentioned on the slide, right? Those were the different industries that they were coming
from. The vast majority of them were mentioned on the slide. It's a mix that is similar to the mix of the Canadian small and medium business population, from industries. So we took that mix of the small and medium businesses and we replicated through the sample population.
Okay, and the definition of a small business in terms of annual revenue, small and medium-sized businesses, what is the maximum?
So in the case of the survey, we had 70% of the respondents had less than 5 million in revenue, and the rest like had more. Like I can't remember exactly like the top like of the spectrum, but like the rest was like a bit over that 5 million threshold.
Okay, and my last question, you said that many of the clients, they said that they're ready to pay a premium just to get a faster access to funding, basically. Did you do any analysis? What was that premium? Like, how much are they ready to pay?
No, I don't have like the exact extra premium that they're willing to pay, and so that's what they are telling us is if you're able as a financial institution or lender, if you're able to actually get me money faster, I am willing to pay more, or I'm willing to get like worth or less interesting financial terms. Like so,
It could be, you know, collateral requirements. It could be, right, there could be other terms in addition to just the interest rate. But I would suggest that, like, even if you look in the market, both in Canada and not, especially with fintechs, especially with alternative lenders, right, it's not always a race to the bottom. In fact, sometimes it's a race to faster. So there's a method to do that. There's some kind of other proof points sort of in the market that would suggest that to be the same.
Thank you very much, and very interesting report. Thank you for putting that together.
thank you.
Really quickly, I'd be curious, how many fintechs are in the room?
That's a question?
We were going to ask that question, but yeah. Thank you.
Thank you. Great presentation. So my question is about the geographic differences. Like in Quebec, we noticed that the kind of demand is high. And I was wondering, like, if we're able to go a bit deeper in the reason behind that, because, like, the perception is, like, in Quebec, you have Desjardins, which is really involved in the community, and especially in the small business lending side. So I want to understand a bit more on that side, if you have some insight to share. Thanks.
No, absolutely, we could dive into like the regional nuances like more, like if we look back into the data. I have to say that I was surprised by that, like that side of the data, because when you look back into like the map that Ketan was showing, like you would see that it's Ontario and Quebec, and businesses, small businesses in Ontario and Quebec that are saying that the lack of financing is hindering the growth or their scale the most. And it's actually the places where you have the highest number of businesses and the highest concentration of financial institutions. So for sure, like there may be like something more like to consider like in that space. But happy to like dig deeper into those data.
Hi, you mentioned that some company might consider shifting and go to another financial institution. Did you ask if some company already made the move, and if so, what type of financial institution they went for? Did they consider other type alternative lenders or even online lenders when they decided to switch?
So in that survey, no, we do not have like the information specific to where did they go. However, we're planning to do it again next year. So this time, I think we're going to make sure that we actually include that question so that we can, I think the underlying part to your question to me is, are they actually going to be making the decisions? Because it comes with like complexity to switch financial institutions. And so it's one thing for sure, like, and I admit it, it's one thing to say that I'm willing to consider switching. It's another thing to actually do it. I think that complexity, though, maybe at the smaller end of the spectrum, like in the business banking side, is probably less than the higher up you go in the commercial spaces. But for sure, like a question that we will include in the next iteration. I don't know. Yeah.
Okay, thanks.
Yeah.
So I'm just curious that probably Deloitte did similar survey in US also. So for SMBs, like in terms of the constraints they face in Canada for growth and financing, like did you find some similarities or very different results for the US SMBs?
Yeah, I would say that, you know, I think it was mentioned on today's fireside that there are roughly 400 challengers in Canada. I think the degree of scale in the US is proportional, right? So 10x everything. But there's more adoption, I would say, of challenger bank and fintech providers, especially for financing in the U.S. So similar patterns, different scale. I would also compare and contrast that with the UK, where we're kind of the challenger bank model has really taken hold, and there was also sort of government influence and initiative to fund the creation of challenger banks and fintechs. And even there, right, some of the recent data shows that the same issues broadly thematically exist. So the ability to switch is a lot easier with open banking, right? However, the time to funding with some of the traditional banks is still slow and it's still lacking. So I would say that the themes still emerge, even though sort of the specific choices and availability of capabilities in the market are a little bit different. But I would say that US and UK are still similar.
Thanks in advance for sharing the report. Ed, did you capture the different types of financial institutions that these businesses were banking with? And if so, did you notice any significant change in any of these answers? Particularly, I'm interested in the difference that might exist between traditional banks and credit unions.
So as part of the respondent, yes, we had like a mix of traditional FIs, challenger banks, credit unions, larger, smaller ones, but also alternative lenders. And yes, like there's definitely like a difference between some of them. With no surprise, like on the larger banks, like have also higher like time to to funding than some of the challengers or alternative lenders like as well, which is part of their value proposition as well.
Just to add to that, right, the statistic that we had, and we sort of spoke about it around the primary bank, I think the definition changes whether your nature of your business, but also and the degree of the products and services that you actually utilize of your primary bank. The membership nature of credit unions kind of supports a bit more of like, if that's my probably if that's where I have my checking account, if that's the account where I do payroll through, I'm more likely to go there as a first point for financing, maybe not the end point, but the first point. So I think that there's that ecosystem play. I think what the larger banks are trying to do is to say, kind of going beyond banking and more of a richer, fuller, and one of the challenges is that the larger banks, their definition of where does SMB end and where does mid-market, larger commercial start would be different than what a credit union would be.